Hello, everybody. This is Matt Fick from Financial Life Planners, and this is your stock market update for the week of February 24th, 2026. Today, I'm going to talk to you guys about some recent news that happened this past week that affected the market, as well as where we're at now and what we're looking for going forward. The big news is about the tariffs, and we know how that impacted the market last year. What happened on this past Friday is that the Supreme Court ruled down the tariffs that were announced in April of last year, specifically the 10% sweeping tariffs, and the market rallied off of that news on Friday afternoon. That being said, on Monday, we saw how the market reacted when there was an announcement that there would be a 15% sweeping tariff. You looking at a new point of view, so we'll see how that goes, but I'll show you how that impacted the market here. And this is the S&P 500, largely trading sideways since January. And here is the news of the tariffs being slashed down on Friday, a little bump up, and then a little bump down on Monday. Right now, we're sitting about even after all of this. And this is a pretty similar chart in the Dow Jones, which is more of the industrial type, steady Eddie type stocks. Where you're seeing a bigger difference is in the NASDAQ, more tech weighted type companies, which has gotten beaten up the most at all three indexes this year, but also saw the most gains last year. So retracing a little bit of those gains that we saw from the growth last year. Some things that we're keeping our eye on for you. One of those being earnings. Earnings are about to end this week, and Nvidia has their earnings tomorrow. But besides that, all of the Mag 7 companies have reported their earnings already, and 5 out of the 6 have beat their earnings. So that is a strong sign for the economy as well as for the market as a whole. Cynthia mentioned last week, and I mentioned it about a month ago. Some other things that we're watching are potential sector shifts in the market, and I wanted to show you guys some charts of that. And to do that, we'll be looking at a long-term chart of S&P 500 against gold. I know some of you guys see these and it gets a little woo-woo for you, so I will sum it down to the most basic points so that everyone can understand it. And essentially, this is showing that up here, this is the best that gold has ever been doing relative to the S&P 500, and here is the worst that gold's been doing relative to the S&P 500. These colorful lines that we're seeing slashing across are looking at old highs, whole high in 1980, high in 1974 or so here, another high in 1987, and looking at what the average price was from that date over time at a monthly interval. So part of what we're looking at, and when we want to see if gold is breaking out of a secular trend line downward, which it has been largely since the high in 1980, is seeing if the average price is beating out these averages over time. And we're seeing that it has largely covered a few of these. Which is why it's looking like we might have a change in a secular trend. Before we jump all in and go all in on gold or on foreign stocks, this is FNDF relative to the S&P 500. So the same thing like gold was comparing the price, but this is obviously a much shorter time frame, FNDF being foreign fundamental ETF. And we're seeing that it is also breaking out of some of these long-term trend lines that we have going back 7, 8 years here. But what we want to see is these trend lines beating, or the current price beating the trend lines from the previous highest highs. And once we see that, that is a more definitive sign that it is time to move some of your portfolio into these sectors. But we're not quite there, and we want to make sure these rallies have legs before moving your portfolio into them. That being said, that's all I have for you guys today. As always, feel free to reach out to us if you need anything, and we will talk to you next week. Bye bye.